What distinguishes Core and Main? PriceTarget research regularly tracks 6,000 North American traded companies, constantly looking for new stock market winners. Our initial selection criteria include adequate company size and liquidity, recent better than market stock price performance, high value trend rating. Income orientation and risk are also considered when appropriate. Important additional considerations include favorable improvement in earnings estimates, recent company sales and earnings acceleration, adequate liquidity, and attractive longer-term market success, and finally, favorable performance of other members of the company's industry group. Core and Main satisfies these criteria quite well. Our appraisal of potential stock price performance relative to the company's peer group and the overall stock market is based on three key drivers of value: growth, profitability, and risk. Core and Main's important characteristics include high financial strength, high expected growth, some instability, and low profitability. A big positive influence on the company's valuation is its superior risk profile. Core and Main distributes water, wastewater, storm drainage, and fire protection products and related services to municipalities, private water companies, and professional contractors in the municipal, non-residential, residential end markets in the United States. Products include pipes, valves, hydrants, fittings, storm drainage products, retention basins, inline drains, manholes, grates, and fire protection products like sprinkler heads and other devices. Core and Main is traded on the New York Stock Exchange with the ticker CNM. On January 10th, 2024, the company closed trading at $40.89 with a market cap of $7.6 billion. Over the next 6 years, Core and Main shares will need to reach $69 to achieve average annual stock market performance of 9%. The company's stock price will need to reach $81 by 2029 to achieve upper quartile performance. At the current price of $41, what are the market's expectations regarding Core and Main's future operating performance? The quartile chart is an essential tool in producing PTR's valuation scorecard. For each metric included, performance of the company and its peer group is ranked high, low, and quartiles identified. The high end of the bar is top quartile, bottom end of the bar is lower quartile, and the line in the middle represents median performance. The company's value is determined and converted to a percentile and also plotted with a red dot. Quartile charts are used to help define a company's investment profile. 12 investment variables are used in the analysis, arranged into 4 categories: valuation, growth, profitability, and risk. Core and Main's investment profile is very sharply outlined. A large number of characteristics stand out relative to the market, including a low dividend yield, low historical profitability, high financial strength, and low equity market value, high historical growth. These are all extreme characteristics. Relative to the S&P 500, Core and Main has neutral growth value characteristics. Its appeal is likely to be to capital gain-oriented investors, and Core and Main is of the highest investment quality. Core and Main's peer group consists of 12 companies that have very similar investment operating characteristics. The company is characterized by low valuation and leading shareholder returns relative to its peer group. Current valuation levels, as I said, are below average relative to the peer group. Recent market returns have significantly outperformed the peer group. Relative to the S&P 500, Core and Main's overall valuation is also low. The current annual total return performance of 68.4% is upper quartile relative to the S&P 500 composite. The company does not yet have a 5-year total return performance record. The company's intrinsic or sustainable growth rate reflects such physical things as units produced, customer counts, square feet, and head count. PTR's appraisal of growth starts from this perspective. Sustainable growth is reflected in the growth of balance sheet measures such as current assets, gross plant, and shareholder equity. As a consequence, our analysis of Core and Main's growth looks to the balance sheet as well as the income statement. Earnings growth, equity growth have been superior for Core and Main. Revenue growth and asset growth have lagged somewhat. The company's historical income statement growth has been higher than the growth in the balance sheet. Revenue growth has exceeded asset growth, and earnings growth has exceeded equity growth, which has resulted in an improving return on equity. Core and Main's consensus growth rate forecast, which is the average Wall Street analyst forecast, is 8.1%, substantially below the average of its historical growth measures. PTR's growth rate, on the other hand, its growth rate forecast of 25%, is substantially above the consensus, but is still below the average of the historical growth rates. Firms create wealth by investing capital at returns above the cost of capital. The higher the spread between the rate of return and the cost of capital, the more wealth is created, and the higher the potential stock market valuation. Consequently, return on capital and return on equity are key to understanding a firm's performance on behalf of its investors. Core and Main's return on equity depends on its return on assets as affected by tax and leverage effects. In turn, its pre-tax return on assets is a function of asset turnover and pre-tax profit margin. Core and Main's return on equity has improved very significantly since 2019. The current level of 20.5% is over 3 times the low for the period and is very close to the high. The key to the story for Core and Main is a very strong positive trend in pre-tax operating return, significantly offset by a very strong negative trend in non-operating factors. The productivity of Core and Main's assets rose over the full period 2014 to 2023. Asset turnover has enjoyed a very strong overall uptrend, in other words. Non-operating factors, income taxes and financial leverage, had a significant negative influence on the company's return on equity. The company's return on equity, even though it's improved, is still group lagging. This factor has negatively affected market perceptions of the company. The company has below average cash and will have to work hard to generate attractive investment opportunities and improve valuation. Our return on equity forecast for Core and Main is 15.8%, in line with our recent forecast. A dramatic steady increase between 2020 and 2023 is the result, and our forecasts are well above the 2020 low of 6%. The company's risk profile has been Core and Main's biggest valuation strength. Its risk profile, in other words, is very favorable. Overall variability has been above average, with above average revenue variability, average earnings variability, and somewhat above average stock price volatility. However, its financial strength is relatively very high, and earnings expectations are also relatively very high. In addition, the company's debt-to-capital ratio has declined. Relative to the Core and Main peer group, the company's wealth creation profile is very favorable. The profile is based on measures of warranted value, appreciation potential, and total shareholder returns. The rate of change in Core and Main's warranted market value has been relatively very high. Its appreciation score is average, however, resulting in an average factor rating of 57. As mentioned earlier, the company's one-year return to shareholders, total return to shareholders, is relatively very high. Total shareholder returns for the company are expected to significantly beat the overall equity market. Based on current investor expectations, Core and Main's shares should reach a level of $127 by 2029, 20.8% per year total shareholder return. A 2029 stock price of 69 would reflect median performance, and a price of 81 would be required to reach upper quartile performance. Core and Main does that comfortably. PTR's value trend rating is the overall measure of a stock's attractiveness relative to a universe of all companies traded on North American exchanges. The value trend rating combines the appreciation score, which measures a stock's appreciation potential relative to the universe, with 100 being the highest, 0 the lowest, and the power rating that measures its current timeliness, with 100 being the highest, 0 the lowest. High value trend rating stocks are expected to lead the general market, while low value trend ratings are expected to lag. Core and Main has a current value trend rating of A, our highest rating. It has a neutral appreciation score of 55, but a very high power rating of 99, and our highest value trend rating results. The value trend rating is designed to identify groups of companies at stages when their performance reflects important underlying change. In these cases, a given value trend rating can be maintained for a relatively long period. It goes without saying, however, that ratings for stocks of interest should be reviewed regularly. Well, that's a wrap for the core and main valuation scorecard. You can find additional company research and current value trend ratings on our website at PriceTargetResearch.com and more videos on YouTube.com/PriceTargetResearch.